This is how to identify a change of character. In order to identify a change of character, we're going to look at individual candlesticks. Our area of supply is over here, the buy before the sell. That is then also where you want to go short from. So you place your order on top of that supply zone.
Holy shit.
Focus on the overall swing in price. So over here we have a low, this was our high, and over here we had a break of structure. This is our high, this is our low, and we know again.
Oh my god. That's pretty aggressive. It's freaking... That was a news candle. Okay, there is way too much confusion online about this whole break of structure, market structure shift, changing the character, changing the state of delivery. Oh my god, it's just so overcomplicated for no reason at all. And I can imagine if I was just starting trading, I would just get so confused on which one is what. So I'm going to solve that problem. I'm going to explain it all for you. And then this is the only video you'll ever need to watch to understand this whole confusion that is basically just people rebranding stuff so that they can sell you a course. Let's start off simply. Break of structure and change of character. I will not use these at all. These are in the SMC category of the trading world. So they are essentially just rebranded ICT stuff. If that offends you, then I'll just piss off because I can't be dealing with you. So what they tend to call a break of structure is essentially when we get a trend. So we get high, 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 and then each one of these breaks above the most recent high, they call a break of structure. I don't really like this because it's more of obviously a continuation style of trading, which I just don't like personally. If you do, then go and look for some sort of break of structure strategy, but that's not what I'm going to teach on this channel. And then change of character is essentially just a market structure shift rebranded. It is the same thing. If you hear change of character and you hear market structure shift, just go with market structure shift because change of character is the SMC approach. It's just rebranded ICT stuff that, in my opinion, is just less accurate and less reliable. So just for clarification, I will not use break of structure. I will not use change of character. I will use market structure shift, and that is it. I do have people in my Discord, which you can join in the description for free, where people will use changing the state delivery. So I will go over what that is later. But for now, let's cover change of character and market structure shift, or just market structure shift, because that's what it is. And just to clear things up, obviously it comes across like I'm hating on this change of character stuff, but my issue isn't so much with whichever one you call it. My issue is people just overcomplicate it. It's a market structure shift is what it was taught as first by ICT, and then people just decided to call it something else so that they could sell you a course because they sound different. Because if you're used to market structure shift and then someone comes across and says, hey, have you heard of change of character? Sounds different, and you're going to be intrigued, and then they're going to try and sell you a course on change of character, which just teaches you everything that has been taught by ICT about the market structure shift, just in a different way. But anyway, market structure shift is what I will use with the 2022 model, of course, and it is very simply a low, a low, a low, and then we break a swing high for a bullish market structure shift. So that dashed line there is the market structure shift or changing character. But if you call it change of character, then don't join my Discord, please, because you'll just do my head in. And then this is obviously my bread and butter setup where I would look for my fair value gap in here, and then I tap back into that fair value gap for my long. And obviously you want this market structure shift to tap into a significant level, whether it's a higher time frame fair value gap, order block, a liquidity sweep, something like that. It's where you're going to find the most valid market structure shifts. If you just take a random market structure shift that doesn't really show much displacement, and by displacement I mean speed, energy, not just like slowly breaks the structure, that is where you're going to have your most reliable market structure shifts. Now I've dropped on the chart to show you what a change in the state of delivery is because it's just way easier to show you on the chart. Now a change in the state of delivery is a little bit different to a market structure shift because while a market structure shift requires a swing low break or a swing high break, a change in the state of delivery does not. It requires a trade through a bearish candle if you are bullish and a bullish candle if you are bearish. So in this little downtrend we had here, your change in the state of delivery would be this bearish candle here, because we have this down close candle, this down close candle, and this down close candle. When they are consecutive down close candles, you put them all together into one order block. So this is one order block here. So when we trade through it, that is a change in the state of delivery and the qualification of this order block. And a quick little shout out to Mr. Knox, who I did a recent video with, which will be popping up in the top of your screen, where we talk about his amazing run with Tradeify. He tends to use this CISD, changing the state of delivery, a lot more than me. But yeah, that is how you qualify changing the state of delivery. And then obviously for a bearish move, you would just flip this upside down. And then once we've traded through that and qualified this as a bullish order block, which again will be a higher probability order block if we have gone into a significant level, similar to the market structure shift, and for order blocks as well, if it overlaps with a fair value gap, it is a high probability order block. So that's a little gem for you there. And then obviously you could get long at the tap back into that order block, or if you're an inversion fair value gap trader, then you could look for an IFVG entry. And then moving on from that, if you want to know when a market structure shift maybe isn't as valid, then check out this video right there where I talk about exactly that. But that is all I have for you in this video, boys. If you are trading the rest of the week, then I will wish you good luck, good trading. Catch you later, boys.